and today we're going to discuss about fixed cost. The first and foremost question is, what is fixed cost? Fixed cost are business expenses that are not dependent on the level of goods or services produced by the firm. Let us break the definition for better understanding. Fixed cost are business expenses. Yes, of course, not only fixed cost, but all the costs are business expenses. The second part of definition is fixed costs are not dependent on the level of goods or services produced by the firm. Let us understand this with an example. Let us say that there is a joystick manufacturing company and they manufacturing joysticks in the manufacturing unit, and they also pay a rent of rupees 10,000 for that manufacturing unit. Their goal is to produce 100 joysticks per day, around 3,000 joysticks per month. During the last month, they did their job perfectly and everything went well. They also paid their rent 10,000 at the end of the month. But this month, due to some issues, they were not able to produce 100 joysticks per day. Day 1, they have produced 50 joysticks, day 2, 25 joysticks, day 3, 75, day 4, only 10 joysticks, and so on. But at the end of the month, they have to pay the same amount of rent. Rent is not going to change, or rent is not going to be less because they have produced or manufactured less quantity of products. Why it is so? Because rent is a fixed cost. Fixed costs are not dependent on the level of goods or services produced by the firm. Whether they produce one joystick or whether they produce 10 lakhs joysticks, they have to pay the same amount of rent. That's the fixed cost. Let me name the other fixed costs. The other fixed costs are insurance premium, salaries to permanent staffs, certain taxes, equipment depreciation. And when we take insurance premium, we have to pay the insurance at the right time, irrespective of the profits or losses of the firm. Because that's a fixed cost that are not dependent on the production volume.